Stocks and Jocks on Fox Sports Radio.
This strategy will cost money.
It's the Nigerian brothers, John and Pete.
I can't remember how I made my money.
With Guy and Dami.
I'm going to give you your money's worth before I leave the day.
Stocks and Jocks is brought to you by TradeMonster.com.
Because it's only for the money.
Heard every Saturday morning at 7 a.m. Eastern, right here.
Hello, this is Chris McCann filling in with today's Volatility Sonar report. The VIX is currently down 1.7%, just above 21 right now. It did dip as low as 20.34 earlier in the morning. However, the S&P 500 is back near those highs, 1252 right now, so just off the highs of the morning when the VIX was at those lows. Clearly, the VIX has perked up a little bit since then. Interestingly, the front month January VIX futures are up. They're up about 1%, 24.75. February futures are flat at 25.85. So those futures are increasing as the VIX continues to decline here. The rest of the futures, VIX futures from March on out, are lower on the day, but they do carry heavy premiums all the way up above 28 out in May and June. So we do have a very significant contango here. The front month futures are pricing in about a close to 20% rise in the VIX over the coming months, essentially. Now, part of the issue with the VIX here is we have had a significant collapse, and some of that has been perplexing, especially yesterday, middle of the week. But part of the issue with the VIX is it is now, it has been, but it is even more now, pricing in the holidays. So the VIX has to take into account essentially time decay because the SPX options need to have that time decay priced in. That comes out of the implied volatility calculation. And so the VIX is pricing in the holidays over the coming weeks here. And so that is part of what is keeping it low. What we are seeing then is people showing some concern going into January. Again, so probably a more fair reading of volatility are those front month futures of 24.65 than the actual cash VIX, which does have some seasonal and time quirks in there. VIX options are trading pretty heavily today, about 162,000 contracts, 3-to-1 calls to puts, so we're back into our more normal ratio there. Leading that charge is the action in the January and February calls. Looks like some call spreads going up, pricing in, again, a moderate rise in the VIX, back potentially above 25. Of course, a lot of these traders put on these call spreads essentially as insurance, as tail hedges, so they are not necessarily expecting the VIX to rise up that high, but trading just in case it does. That's today's Volatility Sonar report.